Hello everyone, this is David from Apex Alpha Wave Trader. Today I just want to show you how to break down a chart in a rational and analytical manner in order for you to see what the chart is telling you. Now, you've heard me say this before, that the essence of doing your top-down analysis is to find high probability or cast iron trades. Well, I'm not here to show you a high probability trade per se. I just want to show you how I analyze my charts from the top down, and I mean that from the monthly perspective all the way down to as low as the 15-minute or 5-minute if I have to. But I do this to see what the market is saying, not what I want the market to say, but what the market is actually saying, so that we can actually have a pretty informed idea which direction to trade for in the new week. Now, today is the 28th of March. Okay, it's Sunday, so I'm preparing for the new trading week ahead. Now, there's no guarantee that your analysis will give you a profitable end, but it really puts the odds in your favor. Okay, so now this is the 1 hour time frame. As you can see, I've marked it out with a lot of lines and figures, wave analysis and all that. Going to the 4-hour chart, you can see this. The daily chart, you can see I've already marked some things out. So obviously I'm not going to be able to give you a proper top down from here if all this information I put on the charts are here on. Okay, so I'm just going to go to a clean chart and show you how I arrived at my final outlook for this pair. And by the way, I am looking at the UsdChf. Okay, so I just want to use this chart and this analysis to explain, especially to traders that are still having issues with analyzing charts to find good trades. So let's go to a clean chart, and this is still the same chart, but as you can see, the only lines here are these two horizontal trend lines that I drew, and I'm just using that to show you that from the monthly perspective we are in the channel. Now let's look at this channel properly. You can see, and by the way, you can see there's no indicators on here except the 200 EMA, and for the other charts you can see I'm using the 200 EMA and MACD indicator here. All right, okay, so you can see, let's look at this chart properly. You can see here we've been in this channel for quite a while, from somewhere 2011 up till now, so we're talking about 10 years. Okay, now if you observe what happened here, we got this area of resistance here which resisted the price for about 3 times, and then the price was able to punch through and go a little bit upward. Okay, and then we had this very strong level of resistance here all the way 2015 all the way to about 2018, and then the market proceeded to go down again. All right, I can actually see, I didn't see that before, but I just saw it here that we actually have 1, 2, 3, 4, and probably the 5th wave, and now we're in a sort of correction here, but that's not really what I wanted to show you on the monthly perspective. I just wanted to show you that once the market went down here, got supported this region here, which by the way was a very strong area of support here in 2014. You can see that between 2015 and 2018 the market was in a second minor channel, okay, above this point, and now we have gone below that point. So that brings me to a possible conclusion that we might get a possible resistance here, because now we were able to punch through this level of support here, okay, and now we are back there again. And this is the monthly time frame, and this looks like a very strong level of support now to be possible resistance. Okay, but remember, this is the monthly time frame, so I'm just showing you what I'm seeing. And the reason why I'm saying this is because I use wave analysis a lot in my when I'm trading, and you have to have 2 possible outcomes or scenarios. Okay, you can't just assume the market is going to go in one direction alone. Now, if the market were to reverse and go in the opposite direction, you will get confused. So it's important for you to have two possible outcomes so that you are actually more prepared. Okay, now, so that's what I'm seeing. So let's just draw. I'll put a band here. Okay, it doesn't mean that this singular band is the only, I'm just trying to show you that there's a strong area of resistance there, and I'm possibly going to change the color to something. I'm just going to use golden rod or whatever that is called there. All right, just to give you guys an idea of what I'm saying. So now let's go down to the weekly time frame, and I have to say something here before I forget. It doesn't matter the kind of trading system or style you use. Some of you don't use wave analysis, and I'm talking about Elliott wave. Some of you don't even know about it, and some of you are new at this. Now, I'm not going to claim that I'm a master at wave analysis, but I know enough to see when it occurs on the chart, okay? And I use that. I use support and resistance. I use trend lines. I use divergence. I use patterns. So I'm trying to say that no matter the kind of trading system or style you use, if you know how to break down your charts, you should be able to have a very good idea of what the market is saying. All right, not what you want to see, but what the market is actually telling you. So now you can see this is a weekly time frame. This dotted line here is our support from the monthly, and you can see how strongly. I'll go back to the monthly and say something else. You see how the market has been bouncing off and on and off and on. So there are two possibilities here. The market might reverse here, possibly reverse for a little bit before proceeding upward, or reverse entirely and still head downward. Okay, so we don't know that right now. So I'm just going to draw a trend line here just to denote something here. Let's make this a straight line, possibly make it red so that we see. All right, so you can see this trend line is from the monthly perspective. Now bear with me as we go down again. So this is what I wanted to show you with this trend line. You can see this red line here, the wavy one, is my 200 EMA on the weekly time frame. But you can see how the trend line that I drew from the monthly perspective and the 200 EMA are almost in sync. So this is why I like to use the 200 EMA, because it really shows you trends. Okay, so that means that I use it as a sort of dynamic trend line. For those of you who don't know why I use the 200 EMA, so you can see how in sync they are here, both of them, the 200 EMA and the and EMA means exponential moving average, by the way. So, and the trend line. So by drawing this trend line, we have a pretty good idea where we feel the market might halt, at least based on what we are seeing. So now we've come to the weekly time frame. So what do we see here? I see a lot of things. Yes, we are in a downtrend, but we just bounced off of a strong area or zone of support from the monthly. So that means that at least we should be able to get to where this trend line or the 200 EMA is, okay? And if I were to check the number of pips from where we are right now, so we are looking at a possibly 120, 150-ish number of pips, which is not too bad if we are looking at a swing trade for the week we are going into. Of course, if the market decides to reverse and head down, this is what I see again. Now you can see here, once you've been in a trend for a while and you have a possible reversal to the upside, you tend to get divergence. Okay, if you don't know what divergence is, please look up the divergence tutorial in my playlist among the videos I have on there. But this is divergence, and some of you will think, how does he know? Well, I don't need an indicator to tell me that this is a divergence. Okay, so just take it from me that this is divergence, and if you doubt me, you can plot your MACD here or RSI or stochastic, and you will see we actually have divergence here. Now, because this is negative divergence, okay, and if I want to be extreme, you can see that we just bust out of this descending wedge as well, okay? So you can see there are a lot of things to see here. Now, but because this is divergence, usually for divergence to kick off strongly and start a new trend, we need to see something in the region of this before we get a possible move to the upside. And if you are familiar with the wave theory, you will see that before the start of a new wave, after the end of the previous wave, you see that we usually start the first wave, second wave, third wave this way. So in other words, from the weekly perspective, this might be a possible first wave. So that means that we have to prepare for the second wave eventually, which of course will take some time, but I'm just showing you what I'm seeing, okay? Of course, it may not turn out that way as well. So let's get on with this. Now, we are focused here, okay? Let's not get too much ahead of ourselves. This is the weekly perspective, so our priority is here, okay? You can see that this was a level of resistance also, that the market was able to punch through, but not too successfully yet. So we are still floundering in this region. Okay. Now, I can actually see 5-wave move here, but let's go down to the lower time frame so I can show you better. I'm just going to delete that tiny line there. So let's go now. I'm down to the daily time frame. Okay. So you begin to see why, if I were to switch to the other chart I have, you can begin to see how I was able to dissect some of these things. But I'm showing you how to do it so that you will begin to have a very good idea what to do yourself when you're analyzing your charts, okay? So going down to the daily time frame, I can instantly see, now this is what I was trying to explain. You can see that we had a negative divergence situation here as well on the daily time frame. And that was what gave us this wave the start of a new wave, okay? So now you can see here we have a first wave, second wave, third wave, fourth wave, and we are in the fifth wave, okay? Now I don't know if the fifth wave will end here, or we might get a little push to the upside before we start our corrective three-way move down, but that's what we are analyzing this chart for, okay? Now this thick line here was the line I drew from the weekly time frame, this one. And you know, by going down to the daily time frame, for the market to have punched through like this, normally when the market or when price punches through an area of previous support or resistance, it tends to retrace, okay? It tends to give you a sort of pullback or a rally before heading in the direction it wants to go. But right now, let's just look at what we are seeing. We have a hammer here, which is also the sign of a reversal, okay? So we are seeing 5 waves here, right? 1, 2, 3, 4, and 5. Now let's go down to the 4-hour time frame so we can see clearly. So you can see how easy it becomes when you begin to understand these things. So on the 4-hour time frame, every impulse wave carries 5 waves, okay? At least basic. Now I'm just talking about basic wave analysis here. So that means here you can see we had 5 waves in here, giving us a correction, which was the second wave. And here you can see 5 waves as well. 1, 2, 3. I'd like to make this my 4. And then the 5th wave was the extended wave here. And then we had this ABC leg, which was a correction. And on the bigger time frame, which was just the wave 4. Okay, I hope I'm not getting too technical here. But you can see here, it was the wave 4 here. But once it ended, we were able to get wave 1, 2, 3, 4, and 5, which if I go down to the 1-hour time frame, you can see clearly here. Okay, 1, 2, 3, 4, and 5. So that means that we should get an A, B, C leg at least down to this band of which is actually now our area of strong support. Okay, so if I switch to my other chart now, you understand a little bit what I'm trying to do. So this is the daily time frame, and you can see here that once we have our 5-wave move, 1, 2, 3, 4, and 5. Now the 5th wave may have ended here because this line here connotes an area of resistance. Okay, so if I go maybe to the weekly time frame, you can see there was this is an area of resistance as well. So we may get a pullback here, and if we get a pullback here, I've estimated that it should bring us down to this level. Okay, and you can see by this dotted zigzag line that I'm showing that this should give us our 1, 2, 3, or rather ABC leg, okay, our corrective wave before we can either get a push to the upside or maybe further move to the downside. Now, why did I bring it to this particular place? Why? The reason why is because I am basing it on the fact that this divergence, and now you can see that because there's MACD here, you can see the divergence properly, right? So this is divergence, negative divergence. So we should get a push to the downside eventually, but I'm not sure if this fifth wave, I'm not sure if it's ended yet. We will have to wait for the week to start and see if maybe the fifth wave will push a little bit higher before we get our ABC leg. So either way, we are still going to get an ABC leg. It might be a zigzag, it might be a flat correction, it might be a combination, I don't know. It could be a triangle as well. Okay, so but the reason why I brought it here is very simple. I'll go to this chart and show you a clear chart. So you can see it here. So now I am saying that it should bring us to this level somewhere here. And the reason why I say that is because after divergence, positive or negative, I use my Fibonacci tool or retracement tool to project the 62% level retracement. So let's assume that this is where the fifth wave ends, okay? My 62%, you can see, is exactly where I drew that line. And I drew the line before I plotted the Fibonacci. So this is because usually, like I said, when the market wants to start a new Elliott wave, a 5-wave move, it should bring us to roughly this region, sometimes a bit higher, sometimes lower, even as low as possibly 90, even up to 100% retracement. But usually it likes to go to this region of 62%, and that is why I marked this region. Okay, so if we were to look at this critically, you can see if we were to get this move here, this pullback here, that should give us enough impetus to start pushing to the upside in this region. Okay, and if you've been observing the dollar recently, you know that we are trending strongly to the upside, and this is the UsdChf. So definitely the dollar dominates this currency pair. Okay, so like I said, I'm not trying to show you a high probability trade or something. I'm just trying to show you guys how by breaking down your charts you have a good idea of what's happening and you become very rational and calm. So now I said earlier that you should have two possible outcomes. Okay, so if I were to go to the daily time frame, this is what my outcome is. So if if we are going to get our corrective 3-wave move to the downside, then that means I'm looking at a possible profit potential if I were to get in early of about 390 pips, give or take a few pips. Okay, that is if it decides to head down. Or another way of looking at it is from where the market is all the way to the first level of reasonable support, that will give us about 185 pips. So that is still good. Now, if the market decides that it's going to push to this trend line here before giving us our 3-wave corrective move, then we are looking at a possible of course we don't deal in absolutes, but we are looking at a possible 150 152 pips, okay, profit potential. So I'm looking at this both ways. Going down to the 1-hour time frame, if I go down to the 1-hour time frame, let me just make this a little bit bigger, and I'm going to remove this band here to avoid confusion. All right, so if I go to the 1-hour time frame now, it's clearer, right? So if we are going to get a push to the upside, okay, but because we have a 5-wave move here, we should get a correction, okay, possibly to this region. If we must go to the upside, we should get a correction, and I believe this is the A leg, which is wave A. We should get a wave B and possibly wave C. So if we are going to push strongly to the upside to get to our trend line here, then what I will do is wait to see what the market will give me. Typically, I will be looking for a wave bottom situation, okay, something like this, a 1, 2. So let's just say were this to happen, example, I'm looking for something like this to take me to the upside. So I should see something roughly like this. Okay, it doesn't have to look this way exactly, but if I see something like this, then I should take this as an opportunity to trade to the upside in the new week. Of course, but what I'm really hoping for is that I'm going to get my 3-wave move to the downside, which is you can see it's a very attractive peepage. Okay, it's very attractive, about 400 and let's see, okay, 360 thereabouts. So these are my two alternatives here, my two scenarios that I'm looking at. We might get a push to the upside, we can trade it that way, or we might get a strong push to the downside, and of course you can trade it that way as well. So I'm not going to talk about any other currency pair. You can use this example to analyze the dollar index, the euro, and of course, because the USDCHF has this possible outcome, if we are to talk about the euro in this case, you see that everything I've said here is the same but inverted. Okay, so because the euro and the USDCHF tend to mirror what the dollar index is saying. So I hope that this was a little bit instructional for someone. I know I said a lot of things that new traders might find very confusing, but I encourage you to do your own research a little bit on wave analysis, and you can see how simple it makes you find high value trades. I have no fear that the market is actually going to give me an ABC leg. Let's go to the weekly so I can show you why. Because this is divergence right here. Okay, I have studied this over the years, and I know without a shadow of a doubt that this will definitely get a retracement. It may not be exactly here. It could be once the market reaches this level, this 200 EMA on the weekly, before we get a pullback. And of course, it might not be as low as the 62. It could just get as low as the 38% retracement here, or it could stop anywhere it wants to stop. I don't determine that. The market will do what it wants to do. But this gives us a fighting chance. And for those of you who are familiar with my profit target calculator, you can see that were we to get a powerful wave 2, then our initial profit targets will be this region here. Target 1, 2, 3, and then on to, if I go to the monthly, you can see all the way to wave 6. Of course, that's a long way away. So what we are concentrating, and okay, now because we're on the monthly time frame, you can see how strongly continuous this candle bar is, or the candlestick rather. This is a very strong continuation candle. All right, so the only thing that will possibly cause us to look for a move to the downside will be if this area of resistance affects us. Okay, so that's another thing I should have pointed out earlier. We are strongly bullish right now. So in my heart of hearts, I believe that this push should get us to this region here. Okay, the fifth wave. I think that we might still have a little kick to the fifth wave, and it should bring us somewhere, at least somewhere in this region before we push down. Okay, so but either way, I'm waiting for either move to happen. I can actually get a few pips to the upside, or I can wait and then get a very strong swing trade to the downside for a lot more pips. So that's my breakdown of this chart, the USDCHF. Like I said, I hope that it was instructional for someone, and of course, I welcome questions. Okay, if you have any question, please just send me your questions in the comment box, and please share this video with your friends, encourage them and you yourselves to subscribe, and I'm always happy to answer every inquiry I get. So this is David from Apex Alpha Wave Trader saying have a happy weekend and a good trading week ahead, guys.